S&P had one heck of a day here. We're going to tell you exactly what happened, all the rumors and all the facts. Let's get into it. 27% of you do not subscribe to this channel. Make sure you click the subscribe button and all notifications because these videos are all linked together and they come out at different times. Now let's get to it. Now the interesting thing about this is you have a range. Now the range that we have is not exactly what you want. Now people are excited because we didn't go down. I mean, it's like small steps, right? I mean, we should be somewhat excited that we didn't go down, but when you really get into this, what did we really do? And so there's always 4 very specific parts of the bar that you want to mark off whenever you get something that has a range like this. And it's simple, it's not rocket science, but it's the low, the high, the open, and the close. And then you just want to see something. The very first thing you do with that is measure the range. Now, once you measure that range, you're going to get a pretty wide range. As a matter of fact, you're going to get 8.45% today. Anything over 5%, I would just suggest that you would do yourself a favor and take fib levels on that bar, drop them down, and measure. After you do that, just come here. And then what we're going to do is we're not going to measure the extensions, but we're going to just see any of the retracements. We're going to take that daily bar and we're going to chop it down to 5s. And then we're going to look at it. And we're going to get a sense and go, okay, well, what is really going on here? What's transpired? And then if we look at something like this, we can see this from Friday on. We can see this range. Okay, now we're back up, right? We can see the entire range of this. We go, all right, what is this really telling us? Well, there's a couple things that I would take from this. Number one, here is your previous close. And that was a battleground. But no matter what you want to say, from that, you are over it. So when you come to that Sunday bar into Monday, we look at that range, you're over what happened on Friday. And then you go and take a look at that and gets you over that 61.8% retracement line. Now 50 is not a fib, but it does determine who's in charge of that bar, buyers or sellers. So if you're above the bar, buyers are in charge. If you're below the bar, sellers are in charge. So when we just take a look at the 50, we can see that the 38.2 level tied perfectly in with another line. And then you can just see how you're at here at the 23.6%. Let's clean all that off for a second and just look at what happened. And this is where it gets crazy. This entire move was done on a tweet that was completely and utterly fake. What's crazy about this is it tells you what's going to happen to this market when this stuff gets itself resolved. And I think that this was very telling. It shows how many people are actually stuck. Whenever I have anything like that happens, and I'll show you what I'm referring to. Now, today when we spiked up, White House promptly dismissed claims as fake news. There was a 90-day suspension on all new tariffs. It was just out there and it was fake. And it's really important that there is no pause coming whatsoever. Now, as a trader, the number one thing you always want to do when you get news like this or fake news, you mark off the low of that bar and you want to see how they act at it. You will note that that bar, you had net buyers all day long on the ES. This becomes a very important level. I think we're at, what is that 49945. I thought it was a little lower than that, but looks like that's what it is. So you always watch those areas and you want to see how you act at them, but all the way up, all the way down, fake news, and then it was just a dumping ground. The same goes for the trades. Now we were fortunate enough to actually be long in here. We saw this early on. We could see it coming with Meta. Meta was the one that I was focused on, and I'm focused on anything that was getting above the previous lows. They were really like the demarcations for line. I went over this in the public pre-market. And I do a public and I do a private every single day, but the public's really good and there's a lot of people in there with great ideas. There were a lot of great ideas in there today, by the way. So if you don't check that out, even if you can't make it around 8:15, it's always available. I don't delete any of them and I'd recommend that you just listen to them because there's a ton of great ideas in there from people from all over the world. Anyway, you can see this level comes down, retest holds, blows through it, gets up to the open, blows through that, and then you have this other demarcation line right there. And this is all we're doing, guys, looking for places of interest. So up, and that is fake news, tariffs for everyone, boo, and then the market comes back down, and then you go, and then you keep retesting that area. When you retest these areas over and over, you want to pay attention to them because they are telling you something. And when the market is telling you something, you're going to want to listen. So watch those areas. We saw that with Tesla as well, and they just provided, very fortunate we were already in them, and they just provided pretty good opportunities to just blow out and get out of the way. It doesn't matter, guys, and this is the point that I'm getting at when I'm saying, hey, people are way, way shorter than you think they are. Looking at the speculative excess, oh, we're not net short in the market. You know how hard it is for the entire market to be net short spec? It's really hard. Don't use that as your demarcation line. It's a huge misnomer. It's a great thing to get, Twitter engagement, but it's not really that good. I mean, something like this, when you look at Meta, I don't know, 33 points in what? 5-6 minutes. There's not really much to do here, guys, except sell and get out of the way. It's a $1 trillion company. When $1 trillion companies move like this, you need to pay attention. And that's the other thing I really want to point out today before we really get into the devils and the details today. But again, look at that mark right here. Look how you acted there all day long. Test, couldn't break it. And then you just held. What I would say is this point right here is where the rumors started spreading that Congress was going to get involved with tariffs. I personally don't see that, but I won't, and it doesn't matter what I say or what happens or doesn't happen. But there's a couple bars here that really tell you what you're dealing with out there. And this is what I want people to if you take one thing from this video, watch this part all over again. None of us have any idea when this ends or how it ends. That's the first thing. So anybody you're listening to saying, I know that this is going to happen, lies. They don't have a clue. Do you know why? Because we don't know how any of these tariff negotiations are going to go. None of us do. None of us are at the boardroom. None of us are in it. And we can all have conjecture about it. We can all look at the pieces. We can assign probabilities. But that's all we're doing. So this bar alone was Trump saying tariffs for everyone. You get a tariff. I get a tariff. Everyone gets a tariff. Okay, that bar alone had you down 2% in a moment. And the point that I want you to take from this, and here you are where Congress is going to get involved, tariffs for no one, whether it's true or not, didn't matter, up 1.7%. If you can't handle this, down 2% on the entire market or up 1.7%, your position size is too big, or you just can't handle the volatility, and just get out of the way. There's literally nothing wrong with not trading this and letting this try to figure out what it wants to be when it grows up. I am a trader. I like trying to catch the bottom. Does it work? No, it's just my trading style. So I am always trying to get there and get the bottom, because if I can do that, I can stay in forever. Like if you bought August 5th, you're staying in for a very long period of time and you don't have to worry about your cost. I like those kinds of trades. So I do try to time this and try to figure out where the bottom's coming. Doesn't mean that I'm batting 1,000 on that. So it means I'm going to get cut up a little bit and chopped up a little bit. So I'm willing to play the game. But my position size is much, much different here. For example, if you're waiting for these to roll and then you're shorting them because you're here, by the time the short trigger hits from 419.19 all the way down, maybe there's $1 there, maybe. This is what you're dealing with now. And quite frankly, if we didn't get this scare, where's the market? Now, we do have a lot of other economic data news that came out and a lot of comments today that are worth talking about. BlackRock thinks that stocks could extend fall by 20% as CEOs see recession. So they all go to this economic club of New York, and it's like a who's who. And what they're doing there is they talk about what they think is going on, and they give these speeches. Some of these speeches are actually really good, but in all candid, I think that he's on to something here, and they got to get it together. And I'll tell you why. CEOs don't know what to do. They literally just don't know what to do right now. Now, his comments are declined by 20% as the U.S. imposes tariffs. The decline could be more than 20%. We're probably in a recession now. I personally think we were in a recession last year. That's my personal opinion. I think a lot of it was hidden by the government hiring, and a lot of it by a lot of other stuff, but that's been my opinion for some time. This, hands down, is going to exacerbate it. So the probability of a recession increases every single day that this goes on, because the uncertainty out there is eventually going to start affecting the labor market. They're just not going to put money to work until they know what they're dealing with. There's no reason to. Trump threatens to hike China tariffs further. Market plunge continues. This was the point that I was getting at, and I'll tell you how you can monitor who's actually winning this and who's losing it. I'll give you a really quick way to look at it. It's very simple. It's not that complicated. But China's move last week, in my opinion, was the exact opposite of what you wanted to see. His response is why I think Europe is actually taking a lighter stance. And what we're seeing here is Trump's threatening further hikes. EU's floating out 25% counter tariff. But what they did say was, if you do zero, we'll do zero. And they floated that out there. And they're actually the ones out extending the olive branch this evening saying, hey, we'll get rid of bourbon, zero taxes on bourbon. So I see the EU actually coming to the table and trying to get this done, which was very different than what France was trying to do yesterday, which didn't go very well. I'm not going to spend a lot of time on it, but you can Google it and look up how that went. More importantly, for us, it's global stocks that are plunging. Why? We'll get into this, because you're starting to see the trend where we took it on the chin. I'm in the U.S. Only 60% of the people that watch these videos are actually in the U.S., which is kind of fascinating. Countries seek to negotiate ahead of Wednesday's deadline. Some will be able to, I think. Some will not. I think between there, we went through that already. I have some other notes here I want to go through. Major stock indexes were mixed, dominated concerns, global trade war. US dollar and yields rose. This is really important. We're going to talk more about the dollar in a second. This is why I don't understand why China did what they did. Because all he has to do is come out and saying, you said you're going to do an extra 34%. Well, here's another 50 on top of the 70. And we take in more from China than they do. China has more to lose here than the US does. I would be really interested in the comment section on this. And I'll tell you where my head is with it. I'll tell you why I'm saying this, and then you can tell me where I'm wrong, because I'd like to know where I'm wrong. No other country in the world has access to the US stock market to list their companies here without going through the public, the way you go through the public process, than China. So when you're buying BABA or you're buying PDD, you're not buying shares in a company. You're buying a synthetic. They don't have the same SEC rules. They don't have the same kinds of filing. That can all go away, access to the public market. Nobody's talking about this, but it depends on what China does next. This can start ratcheting up. One of the things Trump proposed today was $1 million per ship that comes in. I mean, when you start getting into this, this becomes more of a problem for China than the US. I'm currently short China. That's why I'm interested. Tell me where I'm wrong. Tell me where my thesis is wrong on this. I'm very interested in it. So if you have actual comments, not just you're wrong, boomer, but like actual comments, research, or theory, please drop in the comments. I'd like to hear it. We already went through him. 41% of the people that watched Saturdays video didn't subscribe. I thought that was interesting. And I'll throw this in there as a bonus. Worst ending of any season of this show, The Lotus End, I've ever seen. It was awful. Now, very quickly on the breadth of the S&P, they're not locked in yet, but we talked about this Saturday. Just want to reiterate this. Some of these numbers clearly are in now, and we're going to go through this because they did update this before I prepped this and we weren't here. So let's do it. This is actually going to be fun. This is super interesting to me. See where you are on the 5 today. You're at 1. That is crazy. So look, see where you are here? See where you are on these levels? Like, these levels are just absolutely crazy today that's where you're at. That is not a level that you should be anywhere near being at a 5 or an 11 or 21. Like, all these levels, the way that they're coming in, they are absolute trough levels now today. That's absolutely huge and very, very different. And so I would be paying attention to this for some kind of larger bounce. I didn't have these earlier today when I was prepping this. I'm just not going to edit this. I'm just going to roll with it. But if you look here, that's where you were October 23. That's where we bounced. 21 is where our number is. 11% of all stocks on the 50-day now, 11%. Like, start looking at these levels. You know, these are pandemic levels to start looking at this. This is starting to get to the point where you want to start paying attention. This was when before we did Tariff 1.0. Just to point an example of why I don't show Tariff 1.0, I got asked this in the comments. It's a great question. Why aren't you going through Tariff 1.0? Tariff 1.0 was 3%. I have a chart from Goldman on this. If I can find it super quick, I'll drop it in. If not, I'm not going to. Yep, we have it. All right, so effective tariff rate in 18 was the US-China trade war. You can see where you are. The effective rate was like 4%, something around there. This is their base case right now, 15. So you're at 5x. So that's one of the reasons why I'm not using that data point the same way. My personal data point in doing this, there's two ways that I'm looking at this. I'm looking at this as coming through 2002. There's a couple reasons for that. I'm not going to get into it. I might on Saturday's video, but I really got to get into the fact that you're out here looking at something like this. To me, you need to pay attention to this now. To me, this is much more like the pandemic because you have a fiscal policy change that could change and make a turnaround. It's not going to be the same as the Fed. Obviously injecting 1.7 trillion in the market, but it can trigger a V-type response. What happens after that V-type response, I don't have a clue, guys. So what I'm saying is I don't think that we're setting up for something like this. In other words, I'm going to have to blow this up a little bit to show you what I mean by this. These videos are always done unedited, and I just roll with it because that way I can get you the most information and go from there. I'm always open to comments, but sometimes you're just going to have to listen to the ramble till we get to it. See what I'm talking about? Okay, so I don't think you're going to do something like that. That's 1.0 in tariffs. I don't think that's what we're dealing with. I don't think people understand the damage that's being done, right? And so when you see the damage that's being done, to me, it's like the pandemic, where you don't know what earnings are going to be. So we're going in, here's a great example. You're going into earnings season. How are you going to give me guidance on earnings? How? You don't even know what your tax rates are in 50 countries. How are you going to give guidance? You're not. that's going to be a dumpster fire floating down the river with a bunch of raccoons. Like, earnings season is going to be a dumpster fire for these companies. And the ones that can are going to be the ones that win. But what we want to take away from this is, are we at the level where we were at a pandemic level? And the answer to some of this is, yeah, you're there. You're certainly getting there on a lot of these indicators. You're there on the 20. You're there roughly on the 50. You were lower on the 50. I think we got to 1 down here or something insane. But you're getting to these levels where you bottomed on the bear market here, and you're hitting them. Now, does that mean that you're just going to miraculously bounce up and everything's going to be fine and it's YOLO for everyone? Yay, NFTs. No, I don't feel that way. Let's go to this on a bear chart for a second. What we have to do is be realistic about what we're looking at. We're going to bring all this home and show you what I think you should be looking at in a second here. But this August 5th level is going to be huge. So we go to that August 5th and we realize resistance, right? Flips, it becomes support. Support was support, and we just ran right over it. I don't think any of us thought that this was going to hold. I think we had a better chance of Giselle actually returning my phone call. But when you get to that April level, that's where we said, hey, that's probably our level. Look where you opened. And then they did the flush, made everyone get scared. And then boom, rip it. This becomes a level onto itself. If we get super specific and I start looking at like the daily here, if you start marking off daily RSIs that are at 15 or 18, and you drop a pin here and go, where are you in a week? And just start doing that. Where are you on these in a week? You don't even have that many. I don't think people understand how grossly oversold you are. So if you do bounce, what that bounce is going to look like. And I don't think people truly get that yet. It doesn't mean that you are going to bounce right away. I think that you would have to assume that you have to get passed through this Wednesday drop dead date. But when I start looking at this, you have the pandemic when you were back here, you hit it, you rallied up. I'm sorry, the 18th, which was Trump 1.0 tariff. 2, you go back here to 16. You have some that you had an 18, some of them, but go to a 4-hour. I don't have a lot of these, guys. I just don't. And so to me, when I see this stuff and I go, okay, show me 5 years and what's happened over 5 years if I bought this every single time. How did I do in a month? I didn't even get there. How did I do in a month? I did well. I didn't get there. I did well. I'm talking about the exact number. I didn't get there. I got there. I did well. I did well. I mean, it's over and over again. So when I see that, that's what I pay attention to. Watch this with the Qs, and you can see something similar. Let's get rid of the pre and the post and drop it down, and you're at a 20 on that. Now, again, you can just work it off. It does not mean that you're not going to come back down, but you're grossly oversold. So for me to bounce to some kind of level and then work from there, let's clean all this off, is what I'm talking about. See, the majority of people use this dumb stuff, and I hate to say it like that, but they're like, ooh, we're getting a death cross. Yeah, thanks, Rocky. Where were you at like March 25th? Like, what does that do for me now? Like, nothing. It's the equivalent of me sitting here and saying this. Oh, I'm not going to buy till I'm at like the 5. And then you're going to go, okay. So you're going to wait 12% before you get involved in the market. All right, cool. Like, what's the point? You're being given an opportunity. Figure out what tools are in the toolbox to use. You know, one of the things, I'll give you one, and then we'll bring this home, and then we'll make sure you watch the pre-market tomorrow. I'll go over more of this, but for time's sake, I just want to bring this home, and I want to leave you with this, because this will be really helpful. Because people are like, well, give us a tool. I'm like, oh, okay, that makes sense. Stop yelling like grandpa, staring at the clouds. You see, like this kind of thing. So we had this marked off today, and then it moved so fast, and we were buying so much other stuff, and we were covering shorts that we did over the weekend. We did a big Tesla short. But if we look at this, like, that level held this morning. But wait, there's more. If you go back to this, and I'll clean this off and I'll leave you with this, and you go to like a pandemic levels, because this is the kind of stuff that you should be looking at instead of saying, oh, I'm going to use like, oh, I'm going to use the 5-day. Okay. This is point of control, right? This is point of control from the pandemic. That means this is the price that the majority of people own Amazon at. So if you run all your numbers on all your favorite stocks and you go, where do these guys own from the pandemic? Like where are they in at from that pandemic? Where do they own? And you just mark that level off, because that would be a place of fear, right? Any place of fear or panic, you always want to mark off. VWAP, but point of control. Show me where the most people own right here. Why? Because you're going to have a wall there. Look what you had here, August 12th. You had a wall. It held. Came back down today. Look where you were. So then you drop this down after 4 years on a chart like that. And what you're going to note with something like this is you got right to that level today. That's literally where you stopped today. So this presented a real nice opportunity for us to get involved with it. And we're in at like 67 or something like that. I was looking at it from a longer term kind of swing. I want to see if I can get up here. Forget this now. So So I'm just trying to stay with it, see if I can get a 2 handle. Sometimes you can pick the bottoms off and they never look back and I never have to worry about them. But if they were just looking for the day trade in the community today, I mean, they could have taken it when, you know, we got fake news and they would have been up about $15, $16. That is an excellent tool for you to go through your entire list of names and just click through them. So now you have a tool. That's it.